Okay, let's get started. Hello everyone again. My name is Adrian Markish and I'm the publisher and editor of ModernAnalyst.com, the premier online community for business analysts. I would like to welcome you to today's session titled Myth-Busting, the Path to Requirement Success. Today's featured speaker is Keith Ellis, Vice President of Marketing and Strategic Alliances for IAG Consulting. The webinar will last approximately 60 minutes, including a Q&A session. So make sure to submit your questions in advance using the questions feature of the webinar software. I would also like to say thank you for IAG for sponsoring this event. And if you guys have attended our previous webinars, you'll know that you're in for another awesome session with Keith. At this time, I would like to turn over to Keith Ellis to get us started.
Thanks, Adrian. Again, it's Keith Ellis, and we're talking today about myth busting. And myth busting, for those of you who've seen the show, they tend to blow up a lot of things. They tend to go out there and take a look at the real science behind something, take a look at the real facts behind what's going on out there in the market, a lot of rumors that you hear. And that's what we're going to do today. And in fact, this session is really all about trying to drive consistency and productivity. It's, organizations spend so much time trying to force fit requirements like a square peg into a round hole. They spend a lot of time basically getting in the way of their own success. And what this is about is helping people to understand how to get out of your own way. How do you make yourself and your organization that much more successful out there in the market in driving requirements and driving success? This is a very data-intensive discussion because we're here to talk about facts. Let's get rid of the myths. Let's get rid of the opinions. Let's look at real market data in terms of what's happening and how it's being done. And the way we're going to do that is there's a study out there called the Business Analysis Benchmark. It's free. You can go look at it. You can download it off of the IAG.biz site, and you can pull that information. And so I encourage all of you to look at the 2008, the 2009 study and pull the information that we're talking about today. But really what we're going to talk about in addition to that is diagnosing why organizations have such requirements problems. What's going on out there? How can you fix that? What are the facts of performance? Let's myth bust and talk about the commonly held beliefs that are out there that prevent people from being successful into the future. And then finally, let's look at how do you get onto that path for success? There's a lot of people out there who they get on these discussions like this and they start talking about the sky is falling. It's like listening to Chicken Little. I don't like doing that. What I want to talk about is how do you get on a systematic path for success? It's complicated sometimes. There's a lot of things you have to think about and do, but if I can give you some great ideas that you can take home tomorrow and be able to use on some of your assignments or some of you to help you make improvement, then let's call that a success. One slide on IAG, who we are, what we're all about, because I want to make sure that people understand where we're coming from as an industry player. We're an organization that focuses on requirements definition and management. That's basically what we spend our lives doing. And we've done something in excess of 1,200 requirements projects out there. Most of the time people don't call me up and say, hey, Keith, I got an easy one for you today. Usually there's something complex about it. There's 30 to 300 stakeholders. They've got time crunches. They've got issues that they've got to deal with. So there's usually something about this that creates an issue for the organization. And what we do is we come in and help drive that project through successfully, plan and organizing those stakeholders. We also work with organizations in one of three other ways. We work with stakeholders to help them implement requirements best practices, to help them implement software solutions that help them manage the requirements. We come in and we oftentimes are called upon to train business analysts. So any of the things that we're talking about today, finally from a center of excellence perspective, you may look at this and say there's a lot of turnkey information in here about a center of excellence and we can help implement some of that. So with that context, I also want to give you guys some ideas for today. We've got exactly 866 people participating today. So it gives us lots of time for great questions and dialogue back and forth. If you have questions, put them into the Q&A area. There's a lot of people who've discovered that, Lori and Dave and Avish. So put them into the Q&A area. I will endeavor to answer those questions as I go. If I don't get there by the end of the session and answer those questions for you, I will send you the answers. Usually I try to get that done before the weekend, okay? And if I don't, you can send me your cranky email. Finally, the PDU and CDU information is on the final slide for those of you who collect that kind of stuff. It's on the final slide, and you can request of me the slide deck by sending me a note to kellis@iag.biz. Again, that email address is on the last slide, so you make sure that you've got that as you go through, okay? Or make sure that everybody stays to get that at the end of the whole conversation. So there are some studies available to you, though, that I want to call out. And these are studies that I'm going to describe during the session today, and I apologize for that little bit of ramp-up and getting going. But the two big ones that we have done are the Business Analysis Benchmark 2008, which is focused on the impact of requirements quality on large strategic projects, and then the 2009 Business Analysis Benchmark, which I'm going to talk about today largely, which is focused on all the IT development projects, and it tests the framework for requirements definition and management, and what that is in terms of the impact on organizational success, competitiveness, and then mapping out an overall path to success. So both of those studies are freely available to you. Go up on IAG.biz and you can download those too. To give you a sense of the breadth of research, published in September, so it's a fairly recent study, 436 qualifying respondents. I think something like 1,000 people went in and took the survey itself so we could screen them down. And the distribution is there. And what we were looking at was this set of information in terms of the impact on requirements results of all of these other variables that are out there, testing some hundreds of variables in terms of how it impacts overall requirement success out there in the industry. So very comprehensive research. And we spend about 10% of our revenue every year on research and best practices and things. And these are all freely distributed out there. What I want to kick off with is, what is requirements maturity really all about? Because when we're talking about improving organizations, we have to have a framework. And what I mean by a framework is we have to have some visualization of how you go from where you are today to where you're going to be far more successful in the future. And you need to start looking at that in terms of gates and the structure. So overall requirements maturity you can define as the overall capability of an organization to define and manage requirements. Let's keep it fairly simple. And a maturity model is really that visual representation of that organization's level of maturity across multiple capability areas. You can't just sit out there and say, I'm a level 3, or I'm a level 2, or I'm a level 1, and be arbitrary about it. You have to have specific measures of, so what makes you mature? And we look at underlying capabilities like, are your processes documented? How rigorously or mature are those, the way you're doing the process? How about staff competency? When you look at staff competency, are you a level 1, 2, 3, 4 in competency? In technology, are you a 1, 2, 3, 4? So that you look at each of the underlying capabilities, and based on assessing those underlying capabilities, you determine where you are. In fact, many organizations, what happens is they say, oh yeah, we're very mature in requirements, fabulous. Well, really, when you get in there and you talk with them, really all they have in terms of maturity is they've got fixed templates that they expect people to fill in, and they think that that's maturity. Here, our definition encompasses a much broader framework of process and staff competencies, technology, practices and techniques, organizations and deliverables. And then when you have to have a definition of what those levels of maturity are, so that you look at each one and you say, okay, a level 1 is really that it's performed. It's expected that you're going to do requirements, but how it gets done is a little bit ad hoc. Level 2 is defined, where you say, you know what, the processes and staff competencies and the technologies and the practices and techniques, we've written all that stuff down, what we expect people to be doing and how we expect to hire in terms of staff competency and our organizational structure around this. The deliverables, all the templates around that, that's all written down, right? That's level 2. Level 3 is it is implemented. And what I mean by implemented is it is consistent within or across the organization, depending on the domain of what you've implemented. So everybody's using the same. Everybody's executing in the same way, whether it be the processes or the competencies or the technologies, etc., right? Each of those capability areas. Level 4 is institutionalized, which is really where you've ingrained it in as part of the culture of the organization, and level 5 is where you've made it very adaptive. You understand how to optimize or continuously optimize by looking at certain characteristics of the way you're doing this and aligning that to your business best practices and your business needs so that you're continuously testing and updating certain aspects of it or optimizing certain aspects of it. Not throwing out and doing the whole thing, but some parts of it you're continuously optimizing as you're going. And it's building, so you can't be a level 5 unless you're a 4, 3, 2, and a 1, right, on the way through. So to just get a quick sense of where people are at in here, what I'd like to do is open up a poll, all right? Nobody's going to get tested on the end of this thing. Open up a poll and get a sense of where are people? Are you in the kind of 1, the 2, the 3, the 4, 5, based on the definition that I've given you, okay? Based on the definition that I've given you. And that's to look at whether you've written it down, defined it, whether you've fully implemented it across all of those competency areas that I've given you. All right, all of the competency areas that I've given you. Processes, staff competencies, techniques, technology, organization, deliverables, etc. And I'm going to cut this off relatively quick to keep this all trucking along. Some people owning up to being level 2 here, yeah. Because what I'm going to do is I'm going to bend the conversation to the grouping or where it is that you're at now. And I'm going to show you this, okay? And this is pretty typical. People will tend to overestimate where they're at, generally speaking, right up until you go into formalizing the definition a little bit more in terms of what it is. What do we mean by requirements maturity? And that's typical within organizations, right, is that people are very proud of what they've accomplished. I think people today probably very candid and honest about where they're at because the numbers here are matching up with what the numbers are that I found in the past. So here we've got about 69% of people in the level 1, 2, and then very small numbers of people in the 3, 4, and virtually nobody in the 5 space, right? So let me continue on and talk about these different characteristics and what this means to organizations out there. Remember, about half of you are in that level 2 space, okay? And so I'm going to talk a little bit more to that grouping, but if you have specific questions associated with level 3, 4, pop them into the Q&A area and I'll match them or I'll talk about them as I go along, all right? So let's take a look at what we found in our research. We found that almost 75% of organizations have not implemented consistent requirements discovery and management practices, let alone institutionalize that. So what does that mean? What that means is, A, very consistent to the grouping today. But it also means that there's a lot of room for improvement in the industry as a whole. Most or the vast majority of organizations are actually relatively immature in terms of how they're going forward and what they need to do to be able to be successful in the future. So you've got to sit back and say the vast majority of you, in fact about 69% of you, are in a position where you say, we have room for improvement. We want to make change happen. We want to drive the organization and do better as the business or as consultants or as analysts out there in the market or in your companies. So how do you go do that? And the challenge that you get into is that your CIOs, your bosses, are facing a lot of noise. There's a tremendous amount of noise hitting that individual. You know, go do Agile, go do this, go do that, go do the other thing. It's middleware today. It's business process management. It's re-engineering. It's whatever. There's a lot of noise created by a lot of vendors. And so that noise in and of itself means that you're going to have challenges breaking through and having people really understand the business benefit of what you do and what you provide to the organization, break through and get people to coalesce and do something about and make change. Because I used to call this session why some companies will always lose or waste millions. And it's because of the reasons on the screen in front of you. There's a tendency for low requirements maturity organizations to really underfund change. And many of you probably want to make change and you're frustrated because you're saying, oh, what can I do with $1,000? You know, I can't do anything with that. And certain myths of performance improvement really get in the way of making that improvement happen. And again, that's about noise. It's about the CIO buying into messages which are a little bit red herring when it comes to actually making wholesale improvement in the organization. There's a need to look at the whole solution rather than just the parts, and people tend to underestimate the amount of work involved in making change. And for all of you who are at that level 2, I empathize. There's a big shift involved, going from 2 to 3 and beyond. and it's really getting over that initial hurdle and doing it right that allows you to all of a sudden radically transform what's going on in your business. I'm going to talk about all of these things in some degree of detail as I go through this session. But let me give you a first look at what people on average spend to fund the change initiative. And when I went and did the research in this area, I looked at some of the numbers and I said, whoa, these things are too big. There's no way. They must have misinterpreted. So I actually took out any of them where they had very, very, very significant numbers in there, just way over and above what everybody else was. So some of those are taken out. But if you look at this, what happens is if you look at the level 1, even the level 2, 2.5, 3, 3.5, they're all the same number, okay? And so there's a tendency for level 1 organizations to remain level 1 because they just don't spend the amount of money per analyst in professional development that they need to spend. But the reality is, for most organizations, even if this is a 2-year commitment per analyst, and you've got 100 analysts out there, you're making your money back based on 1 or 2 or 3 projects going right, going properly out there. And because the numbers are so significant in terms of what can happen and how you can transform organizations as a whole. So you need to step up and say, the organization is not dealing with small amounts of money to make the kinds of changes that would significantly alter current performance. Also, there's a tendency to believe, in my belief, is there's a tendency for people to think, you know what, if I just hire good analysts, my problem's going to go away. And it's simply not true. It's not true. Yes, having good analysts has a material impact. You certainly can't go out and hire fools and expect gold to be, dropping out of the ceiling. It just doesn't work that way. But the CIO can't just hire the problem away and make the problem go away by having good requirements. In fact, lower skilled people in higher maturity companies outperform higher skilled people in lower maturity companies. And what I mean by outperform is vastly outperform higher skilled people in lower maturity companies. And I want you to think about that logically and think about how frustrated some of you are. Some of you are extremely competent. You've been at this for many, many years, decades, and you've got tremendous experience built up over the years of working for high maturity companies. And now all of a sudden you go into a lower maturity company and it's just disorganized. It's just very difficult to accomplish what you were accomplishing very easily at some other organizations. And so it kind of makes sense that delivering on time and on budget and on function and all these other kinds of things, when the stakeholders are behind the process, when the processes are well defined, when the techniques are well understood, these become much easier. Let me show you how vastly they outperform. It's almost 10% across the board. Projects on time, percent of projects on budget, percent of projects delivering their required functionality. It's about 10%. So when you think about that, it's a significant chunk of your overall budget, right, that you'd be late or over budget on and these kinds of things, right, by basically having people who, and this is, by the way, this is not the same competency level people in different companies. This is a lower competency level person working in a higher maturity company outperforming higher skilled people in lower skilled company. Yes, so you're dealing with you're a level 1, level 2 organization and you're challenged in dealing with the resistance to change. What you can do is it really depends on what the business is trying to accomplish. And so I'm going to give you a lot of arguments for change today in the session, and I recommend you think about some of those in terms of working with the organization, because everybody's definition for what is most important to the organization is going to be a little bit different. The second thing is that you've got to give people a framework for change. So the first thing I'm going to recommend you do is when you get back into the office, pull out the requirements, the maturity model that I'm showing you today, and present that to your people to get people on board with that definition. Because when they understand what it means to be mature and what it means to improve, it lays out a roadmap for people. The other thing you can do is you can have somebody like us benchmark you against that and do a requirements definition management maturity assessment. Where did the stats for lower skilled versus high come from? Okay, In fact, Jennifer, what we did is we rolled these up from the survey itself. We had a certain set of definitions for what the skills were of an analyst. We asked people to report where the skill level was for their organization. And what we're cross-correlating is we have an overall maturity model which we rolled up, and all of the elements of maturity, we're comparing two different sets of scenarios. People who are saying they have high levels of maturity and per skill, but overall their score across all the capability areas were somewhat lower. Is there a Twitter tag for the presentation, Katie? Not yet, but I certainly want to talk to my marketing exec on that particular one. The higher skilled people are better at business meeting objectives. Isn't that what really counts, Francine? Possibly. Is it materially different? Yeah, maybe yes, maybe no. I think it's true, but the issue is that you're taking a lot longer to get there. You're taking a lot more cash to get there, and you're delivering less functionality when you get there. But you're probably better at understanding what the business is looking for. So it's a little hard to necessarily make a firm conclusion on that last particular one. Now the final one is, let's look at this concept of people tend to want to basically take and change their SDLC, and by changing their SDLC, make the problem of requirements go away. And it doesn't work. It doesn't work. There's a massive change toward Agile. There's also a massive backlash against Agile going on right now, which is people trying to make the problems of requirements definition and management go away by changing their SDLC. And it's distracting. It's a red herring, and it does not work. And here's the research that supports it. What it says is, if you control for requirements definition and management maturity, every single one of these base methodologies for overall system development perform almost exactly the same. If you control for requirements definition and management maturity, every one of these basic methodologies performs exactly the same. Pretty scary. So you can't just say, I'm going to change over to Agile and my problems and requirements will go away. No, as part of that change to your new approach to system development, you have to ensure that that stakeholder communication remains strong and improves throughout that transition. Because if you don't, you'll break it down. It will fall apart over time, and you will be less successful than you expect to be, right? Less successful than you expect to be. So you need to step back and look at some of those and start saying to yourself, how do I then, regardless of my methodology, how do I then become good at communicating requirements? Waterfall is actually, it's not materially different, Francine. So I wouldn't sit back and say, you know, is one marginally better than the other, because it will really also depend on project type and a lot of other factors. Look at the big picture pattern. It's basically a step pattern, right, between one class, the next class maturity level, the next class maturity level, the next class maturity level. That's the big picture story. Wow, how fast can I get this slide? Jim, just send me an email to kls@iag.biz. It's also up on the Modern Analyst website, probably, that you can pick this particular one up. Okay? So take a look at that. And when you come back, a lot of people get excised about requirements because they think it's a template. And the reality is that requirements are not a document. Please, if you take one thing away from this whole conversation, go back and beat up the management team and say requirements are not a document. They're a process. The result of that process is a document. It happens to be that the artifact of your process oftentimes is a document. It's also, the artifact is also a really well-defined and rendered system. However, to make the whole thing work, it's a process that has certain techniques that support it, that have a certain organization and structure around it, that has technologies that enable it, that have staff that are competent in doing those activities. And finally, yes, there is some documentation that's produced. So many organizations in the area of requirements are good at one part of this thing. Fewer, and only the really mature organizations are good at all of these things. And so one of the first things I encourage people to do is sit back and say, take people away from a documentation-centric view of what requirements are all about. Get them to this more holistic view that allows you to start thinking about, are we really addressing all of the things all the way around this wheel? Because if you're not, you're going to have challenges. Even if you're in an agile world, we have a big agile practice here. Even if you're in an agile world, you still need to deal with these issues. Requirements are still there. They're still present. You still need to communicate business needs somehow between the business stakeholders and the IT teams. How you go about doing that might change. The techniques change. When you're in a waterfall or iterative, which is much more efficient these days, kinds of way of doing things, then you need to look at how is this going to work for your organization. That's all I can encourage you to do. The cultural change, however, is also very, very difficult for people because when you're at a low level of maturity, there's a couple of people who identify, well, there's about 20-odd% of you, right? 22% of you said we're at a level 1. And what that really also implies is you're likely only spending about 12.7% of your budget on requirements on average, which means you're coming out of the gate and you're leaping very fast into a purchasing cycle of probably purchasing off-the-shelf software and trying to integrate it and getting killed, or trying to do development with weaker requirements, beginning coding early and getting killed. Some of these kinds of patterns of behavior are happening. And as a result, it's a difficult cultural change for the CIO to say, wait a minute, whoa, whoa, whoa. We are going to ensure we know what it is we are going to do before we start going and doing it. We need to understand the business requirements first. And by doing that, we can start moving this into solution architecture, and we can start moving this into, ready-to-build requirements, depending on what our SDLC and our approach is. So it's a big change from saying I'm going to spend 12% of my budget on requirements to I'm going to spend 23% of my development budget on requirements definition and management. It's a massive cultural shift, because there are big implications to that in terms of how much we're doing up front, what we're doing in the middle, the basic activities, the importance of the analyst, the funding behind the analyst, the number of analysts that you have. All these other kinds of things are impacted. Let's talk about the facts of requirements. 69% of you said we're level 1, level 2. Let me show you the impact, okay? From the survey and the study, and this was repeated, and a university prof and institution approached me and said, hey, we've got to turn this into an academic paper, and going through and reviewing that, and they looked at it also. We have a high degree of confidence on these particular numbers. What you've got here is it basically says, if you're a level 1 organization, on time, on budget, on function, and projects being successful, you're probably batting around 50%. Okay, on time, on budget, and projects being successful. As you move forward to level 2 and level 3 and level 4, every single metric of performance improves. Every metric of performance. Remember that old adage, you can have it better, faster, or you can have it cheaper, pick any two? It's not true. You can have all three. You just have to have good quality requirements done on the way through. Okay? So you need to sit down and say, how are we going to accomplish this? You accomplish this by driving systematically higher and higher and higher levels of requirements definition management maturity. How long do I feel the analyst should be involved in the project? Carol, it depends. It depends on what you define as the scope of services provided by the business analyst. In our world, speaking from IAG's perspective, we tend to be involved early and often, where the vast majority of our work is up front, but we stay with the project all the way through the SDLC. And if you've done the jobs right, in other words, you've got you've got low change in the requirements because you've got clear, accurate, and complete requirements right up front, the amount of work on the back end tends to be rather minimal. It's more of a requirements management change, impact analysis, these other kinds of things. What kind of change or training do I suggest, Abdullah? It depends on the competency level. So oftentimes when we're doing training activities, we do an assessment called a requirements management maturity assessment. And in doing that assessment, it identifies the weak competency areas, whether it be elicitation or it be the planning, or whether it be the requirements management or traceability, any of these different skill sets, you could have some degree of weaknesses, and that's what's holding you back. Most of the time, it's elicitation. So when you're dealing with lower maturity companies, it is the ability of the analysts to reach out and engage stakeholders, ask the right questions at the right time to elicit the understanding of the business, regardless of whether they are a subject matter expert or not. That tends to be the most significant weakness and the thing that you have to spend your time training on. So let's go to the next step. So what we've said is basically you're going to spend 60% or whatever it is more for your applications if you're poor at doing requirements, especially if you're getting into larger and larger scale things. So the average cost here of a $250,000 project by maturity level, what you look at is you say, how much more is that level 1 player paying? How much more is the level 2? So 75% of you are paying more than, 69% of you are paying more than $343,000 for something that should have cost $250,000. Think about that. Let me ask you guys a question. How many of you would pay 30% or 40% more for the same car, right? You're going to go out there and you're going to buy let's pick a common car, a Taurus, or if they're not even making those things anymore. Everybody's going to buy a Taurus. How many of you are going to, for the same make, model, and mileage, how many of you are going to pay 40% more for that? Let me ask you a different question. How many of you are going to pay 40% more for a pizza? Not going to happen, right? But we accept this in the technology space. So I challenge you all to look at the impact that requirements definition management maturity can have on your organizations, because the average organization is wasting about $1 in 3 spent on development and maintenance budget. $1 in 3 is wasted. And that mix shifts depending on the kind of portfolio you have. So here's where it's difficult for you larger companies that are out there playing or participating today. Larger companies tend to have a much more vastly mixed portfolio. So you'll have some large number of very large projects mixed in with some number of kind of run-of-the-mill, projects in the $2 to $3 million range, and, mixed in with a bunch of projects that are 4 or 5, whatever it is, millions of dollars. So you've got a mixture in your portfolio. When you've got a more homogeneous portfolio, you tend to have less wastage, oddly enough. When you've got a very mixed portfolio of projects, you've got very extreme wastage. So the numbers will tend to push up much, much, much higher. And so that's where, if you're a fairly large bank or insurance or manufacturer or whatever, and you're dealing with that oddball project that's larger, you'll tend to see that oddball project, which is larger, crash and fail, because it is the outstanding one. And when we looked at and compared the results between 2008 and 2009, what we found is that the wastage levels spike dramatically when you're dealing with strategic projects that are significantly larger. So when I change and look at the portfolio as a whole, the curve flattens. When I look at these strategic projects that are larger, strategically different, significant amount of change, the numbers push upward to the right. So it's a serious barrier to organizations, because they cannot effectively implement strategic change if you're not good at doing requirements. The wastage is too high. You estimate $10 million, it actually ends up costing you $20, $30 million to do the same activity. Starting to get interesting in terms of the numbers? So let's, some funny responses coming back. So let's talk about the impact areas. Because so often people sit down and they talk about the importance of requirements from a self-centered perspective. Well, we can influence business analyst productivity, right? I can make analysts much more productive. And that's interesting. But frankly, if I'm in another division, who really cares, okay? The next thing is, and what we've been talking about here, is all about IT development efficiency. That's this bucket down in here, right? And in there, what we're talking about is I can, make the whole development of projects much more efficient. You can be on time, you can be on budget, all these other kinds of good things. And that's interesting, and it's exciting, and it's important, but it's not necessarily what's going to necessarily bring people on board with this. I think it's important. The numbers are huge. Like, how many investments can you possibly make that are going to have that kind of return? But I think where the biggest impact is not really in the technology domain. You got an inkling of it when I started talking about the ability of organizations to impact major change, to implement major change. What we look at, I think, in the most significant area of improvement is this whole business objectives efficiency. How efficient is your organization at achieving a business objective that touches on or is impacted by technology implementation? So let me show you the numbers in here, okay? This one here is my favorite. And it's harder to explain, so you need to sit back and take a look at the numbers behind it. If you're a level 1 organization, which about 22% of you are, okay, your project success rate's in around 49%. The projects that hit the objectives of development, about 54% of them actually hit the objectives of development. Versus if you're a level 4 and it's like 89% of the projects are successful and 83% hit the objectives. So what you're doing is you're spending more time, effort, energy, and budget to achieve a far lesser result. Does that make sense? So what you're going to do is you're going to work for an organization, and you're going to work twice as hard, spend twice as much money, take twice as long, and produce a result that's half as good. How good is that organization going to be at competing long term when its competitors take half as long, spend half as much, and produce a result relative to yours that's twice as good? So it makes for kind of an interesting set of math, all right? Just to underscore what this really means. Because if you just take two organizations, and this is just small number theory, okay? So you take two organizations, one is a level 4, one's a level 1. What I'm going to look at is by how much does the level 4 outperform the level 1? Let's assume that these are very small Fortune 500 companies, and they only have 1,200 people. Each of them gets one objective a year, okay? And every time you achieve an objective, you get about $2,000 a month, okay? And, you get some incremental benefit. By how much does that level 4 organization outperform the level 1 over 10 years? I just want you to throw your answers into the Q&A area, okay? Anybody think, let's see, let's start big. Do you want to start big? $1 billion. Anybody think $1 billion? Nope. Okay, how about, I got to vote for $4 million. How about $500 million? Okay, $250 million. Okay, we got to vote at $100 million. How about $100 million? Anybody else at $100 million? We got Roy here at $100 million. 2 people at $100 million. 3 people at $100 million. Okay, how about $50 million? Okay, Karen, you're in at $50 million. How about $20 million? I'm looking for a spike of people saying, yeah, I'm good with that. $10 million. Alan, you're in at 10? Okay, 20. Alan's in at 20. Okay, now we got a bunch of people saying yes. So in around $20 million, okay? And so what I want to do is emphasize to people, it's actually $250 million. Huge, right? Just if people achieve some small amount of incremental benefit. Why? Because what's happening is one organization is so much more efficient at achieving an objective that creates a monetary benefit than the other. Remember this whole idea of some organizations are just seen as old and staid and slow-moving. Requirements is all about injecting that ability to be nimble into an organization. Being awesome at requirements definition and management, being high maturity at requirements definition and management means very efficient utilization of management, very fast reaction to market and market change, And you can actually see it in the financial performance of companies. Now, this is something you need to take a little bit with a grain of salt because the variability between the categories is higher than the variability within the category. The variability within the category is higher than the variability between the categories, but it's interesting anecdotal information. What we did is we looked at organizations. Now, remember the average that we were looking at, average organizations level 2, so you'd expect them to be about 0. So what we looked at in here, we found is that the level 4 organization out there in the market that we got our surveys back on outperformed from a return on assets. They were looking at publicly traded companies here, okay? And we looked at their balance sheets and got return on assets, which is a measure of an organization's management efficiency. And what we found out is that organizations at a level 4, on average, had a return on assets that was 10% higher than their industry peer group average return on assets. And what that translates into is billions and billions of dollars of outperformance. Very, very significant. Okay? In fact, Joan, you can take on the prior example, you can take any example of growth and run the numbers through that I gave you. So long as you add value, some incremental small amount of value, when you achieve an objective that you get to add somebody after, 500 or $500,000 or something like that. Anytime you do something like this, you add a strategic benefit, then you get a parabolic model where the level 4 organization has a parabolic improvement over the level 1 organization. And again, it's just because the performance characteristics of the level 4 are so much better than the performance characteristics of the level 1 in terms of the ability, the time, cost, and efficiency of hitting certain objectives on the way through. So making improvements. 86.5% of those surveyed tried to make improvement in requirements discovery and management in the last year. Okay? 2/3 of them reported making a substantial improvement in stakeholder satisfaction and on-time, on-budget performance as a result. 2009, Mahid, was the year of the survey. Again, you can just go to the www.iag.biz and download the whole survey and take a look at it, okay? Because it addresses some of these things. What it basically says is this area of maturing organizations is very important. People are really working hard to try to do it. Most people are successful in making some degree of change. Now, you do have issues associated with stickiness that you continue. What helps you make change and help you improve this year won't work next year. That's the weird thing about this particular model. So if you fix your templates and everybody gets, yeah, that really worked last year, fixing your templates again next year is not going to have much in the way of impact. You've got to look at other aspects of your competencies. And that forms part of the path to success. So if you take away anything from this, it's taking away, you really need to go back to that model of requirement definition management maturity that I showed you earlier and assess where you're at. Get people on board with understanding what it means to be mature. Get people to understand where your organization is within that maturity continuum. Because that starts you on that path of saying, okay, I'm here, now where do I want to go? I want to go there. So if you don't know that you're in Boston, you could be anywhere in continental U.S., how are you going to figure out a plan to get to Phoenix? Not possible, right? You've got to know where you're at. And you have to have a map that's meaningful. When you start looking at making those improvements, you need to address all of the RDM capability areas. Now, it may be that one quarter you're doing this, one quarter you're doing that, one quarter you're doing another thing. You're not trying to do them necessarily concurrently, depending on how much resource you're willing to put into this thing. But when we outsource an organization, for example, we're doing it all at once in very, very rapid sequence because it's the only way you can get a 60% improvement in an organization in a very short period of time. But for yourself, you need to step back and say, where am I weak in my capability areas, and then how do I address those? Target your change, make those fixes, and then move on, because next year you're going to have to look at another area of capability and make those adjustments. And then have some guiding principles that will help you outperform. Okay? So when you have those guiding principles, you can then go forward and be very, very successful. But again, it all starts with that baseline. Step back. Take this back to your office. put the little red dot where you think it is for that particular competency level. And start asking the question, why? Now, when we do our maturity assessments, we go into a lot more detail behind the scenes. We're interested in things like, okay, well, inside process or across this entire model, there are multiple processes that you need to look at. So, staff competency, process, technology. So it's actually a little bit more of a three-dimensional model where you're looking at things like, requirements definition, management maturity, the elicitation maturity, the verification maturity. There's basic processes that sit in behind, or sub-processes of requirements definition management that sit in behind that you need to look at. And there are characteristics associated with each one that you need to look at. But some guiding principles for you, especially those that are lower level maturity. This is the 1-2 guys, okay? So if you're a 1-2 maturity, here's some stuff for you, okay? In the early stages, simplicity is king. You really got to keep it simple because organization can't take on a lot of complexity and expect to be successful. So emphasize 2 things. One is speed and timeliness. Now what we were looking at, where these conclusions are coming from, is we looked at the organizations that outperformed others. We looked at organizations that were above the averages for the organizations as a whole and said, what is it about those organizations that is interesting? What's creating the benefits in here? So one is speed and timeliness, especially the efficiency with the stakeholders. That kind of comes back to your elicitation methods and processes, really looking in at those and saying, how do I do that better? Define what it means to be clear, accurate, and complete. Build the organizational support for RDM. Gosh, as a level 1, don't do that. As a level 2, absolutely do that. Because at level 1, you're not very good at it. So there's no point in telling people, trying to build support for something that you're not very good at. You want to build capability and build support for well-done capability or well-provisioned capability. Define the service levels of analysts, traceability, analyst scorecarding. All of those tend to have very positive impact. In the later stages, you're really focusing on the breadth to deal with complexity. So the requirements analysis or elicitation skills or the facilitation skills, you cannot possibly overbuild that capability. And then really treating that BA role as a profession within your organization, and you're backing it with sufficient training and depth of technique. That's really what you're doing as you're going later and later into this thing. So with that, I have questions coming in as fast as I could possibly answer them. So I'm going to focus on those questions and see if I can get through and answer as many of them as I can. And I talked faster just so I give you a little bit more opportunity to give you some answers. So feel free to ask about any particular subject. But the PDU and CDU information is in front of you. If you want the slides, email me or email Adrian. Hopefully I've hit the objectives of the session today. If I haven't hit those objectives, you make sure you send me your cranky email, okay? But let me see if I can cycle through and pick up some of these questions as we go through. So, okay, Anne. Let's see, when we're defining an organization's maturity level, what we're really looking at is we're looking at those underlying capability areas. And what I mean by the underlying capability areas are the 6 that I identified there, the process and techniques and technology and the deliverables and et cetera, right? And you have to be very consistent. You can't be ambiguous about what those things are. They have to have a very specific criteria that you're looking for, and you need what's called a gated system so that it's yes or no. They either do or don't have certain characteristics in place before you go from level 2 to, say, a level 3 to level 4. Otherwise, you cannot be prescriptive in saying, okay, you're level 2, this is what you need to do to get to a level 3. So hopefully that answers your question. So, Jacqueline, how much time to go from level 1, 2, 2, 3, 4? It depends on the organization, its size, its commitment level, the management backing, the resources. I know that's a lousy answer, but you know what? I would start talking in terms of like 18 months, these kinds of things, if you're really going to make substantive changes. We do it in a very compressed timetable, but only when we're charged. We do the outsourcing activity where we do a transformational outsourcing. And you basically are injecting all of the people process technologies, all of our management techniques and stuff like that into an organization. That allows you to compress it. But you can go about 18, 24 months. You can go from a 1 basically to a 3, that type of thing. It depends on, again, a lot of factors. Center of Excellence become critical component. It depends, Kevin, on you can have many different structures for the organization, and that's one of the pieces in the organization that we look at. It becomes increasingly important because it's harder and harder to manage. As you get more and more consistency across the organization, you will be looking down through the organization at how they are managing the framework of requirements, the services of the analyst, and the provisioning of analyst resources. But what you mean by a center of excellence and what some other organization might mean by a center of excellence might be two very different things. So the structure of a centralized capability becomes important. How and what you're providing with that capability, that has flexibility depending on the organization out there. Cindy, in terms of the capability maturity model, there are similarities in that both of them are gated, both of them are 5 steps. Ours is exclusively focused on requirements definition and management, and ours is exclusively focused on how do you make that measurable, tangible, managed, and researched. In other words, we've implemented a whole lot of times, and we've got a lot of research backing it to say, yeah, this actually works. So CMM, different animal, IEEE, they do a wonderful job, but it's overall, it's the entire system development organization rather than a specific element of it. Does this work in conjunction with, yes, it does actually, when you're dealing with Lean, Six Sigma, all these other kinds of things? Absolutely, because you're talking about a certain technique variants, right, when you're dealing with something like Lean or Six Sigma. Because what all you're really doing is adapting the way you're communicating and adapting the technique set underneath it to accommodate a specific kind of environment that you're working within, and we do it all the time. Where do you see the role of business analysts in these more mature organizations? It depends. The organization that, hey, I'm answering that a lot. I got to stop saying that. The organizations that perform the best, okay, are where the analysts are a shared resource between IT and the business, oddly enough. If analysts are owned by the business exclusively, they tend to underperform vastly in terms of time and budget, on time, on budget performance. If they are owned by the IT organization specifically, they tend to vastly underperform on function performance. So they tend not to help the business get what the business needs in terms of functionality. The best positioning is that it is a function that sits between business and IT. And oddly enough, what that means is that they are most susceptible to being reorganized by people. So it's a challenge in terms of the position and placement of that organization. Are they embedded into certain business areas to gain depth of understanding of that area of the business? Marco, yes and no. You can. My belief is that no, it's not essential. Okay, if you have a person who has excellent elicitation technique, that person has the ability to reach out, engage the stakeholders, ask the right questions at the right time, and extract their understanding of the business. And in fact, sometimes it's to their detriment if they have high degrees of subject matter expertise. However, if you have a person who is capable of going in and doing that, right, you have somebody who will pick up the subject matter expertise very, very quickly. So from my perspective, what you want to do is focus in on the technique depth and adaptability and the performance of that person rather than, is this somebody who's, worked in financial services before? Because the past prior understanding of a particular subject domain is not really all that helpful, in terms of if they're strong in elicitation. Team transferable analysts across various areas of the business. Yeah, we do it all the time, Marco. So if I've got an analyst team that's in, financial services one day, they could be in government the next day. They could be in, manufacturing environment doing an ERP selection the next day. Literally, they're doing that. So they move very, very quickly across, geographies and industries and subject applications, and they could be moving very, very quickly between application development or system selection implementation. Is there a need to train a PM on requirements gathering? Yes, you do need to do that. Project managers don't need to be excellent in requirements elicitation per se, but they really need to understand what it is and what it's about, and they need to understand what is good requirements and not good requirements. And you do need to set expectations on the time, because the project manager is the one ultimately that's setting, overall project expectations for the project. And where you run into trouble is where that person is working against, good requirements practices. So you do need some level of education. Google's an excellent example for success. Yes, I mean, anytime somebody who owns a company is making and is worth billions, you've probably got a great example. Do you think requirements tools in the industry are up to par for any of the maturity levels? Yes, some of them are very, very good. In fact, in the last 3 years, you've seen a very, very significant evolution in the type and quantity and quality of the tools that are sitting up there. If you look at the About IAG slide, you'll see that we work with maybe a dozen of them. In fact, we track in excess of 100 tools in here and have used and worked with. So you name it, we've worked with it. And yeah, a number of them are becoming very, very good. What do you prefer in Project Agile or Waterfall, and why? Diana, it really depends on the organization and the project. So some of our projects are hyper successful and they're agile, and some of them are, hyper successful and they're waterfall. It really depends on the organization. So, for example, oh geez, I can't use client names. Let's see. Okay, so here's an example. There's a product-centric organizations that we work with, where they tend to have a consumer product, or it's an online service or something like that, will tend to be more agile-oriented. And so where they're working with us, they have problems with their backlog, and they have problems with the predictability of the costs and the articulation of stakeholder needs. They just have different problems, okay? When we're dealing more with waterfall, it's organizations that are doing very, very large-scale transformational change. They'll tend toward or gravitate toward that class. Although today you see a little less in the way of waterfall, a little bit more in what I'll call iterative, because people tend not to say, hey, I can do the big bang. They tend to, take out slices of application change. I think also what you have today is everybody is a hybrid of some kind. There's not really pure agile, pure waterfall, pure iterative in any organization. It's usually a hybrid of something. So you see elements of different methodologies within an organization as they try to embed and make something that really works for the organization. The majority of requirements are more influenced rather than looking at the actual process. Majority of requirements are more influenced rather than looking at the actual process. Amba, I'm not sure exactly what you're looking for in there, but in fact, in our world, the requirements are not influenced. The requirements are directed. The requirements are elicited. The business analyst is accountable for ensuring that the requirements are clear, accurate, and complete. You must make the analyst accountable for that. However, you can't make the analyst accountable for being subject expert. The business is accountable for being subject expert. So in that way, what you have is a balance of responsibility, and that the understanding of the process, execution of the process is owned by the analyst. Understanding of the business and the explanation of the business is owned by the business.
Hey Keith, it's Adrian. We lost your audio. I'm not sure when to mute or not.
Hey, sorry about that. I got disconnected. I have probably one last chance for one last, unless, are we out of time, Adrian?
You could do one more, Keith. No problem.
Okay. Let's see. Yes, okay, so let's just try here. If success is determined majority of requirements maturity, what is the role of highly skilled analysts? Are they still needed, or is it better to use resource more? Dominique, yeah, you know what? You really want highly skilled analysts. Of course, you want highly skilled analysts. The point being, however, is that it is inefficient for highly skilled people to work in low maturity organizations. There is a multiplier effect that happens as you add higher and higher levels of maturity to an organization, in that such that even lower skilled people will vastly outperform higher skilled people. What I didn't put on the chart is, what a level 3 person does in a level 3 organization, because it blasts off the top of my chart there and kind of distorts the message that I was trying to give. So of course you want highly competent people, and highly competent people will tend to improve your results. But it's also the message needs to be taken away. Level 1, level 2 organizations tend to, and I hate to be harsh, tend to hire level 1, level 2 analysts as well. They tend not to be able to hire great people. So you need to start looking at, well, how do I do this? How do I embed it into my hiring practices and all these other kinds of things around it? So with that, look, lots of wonderful questions coming in. I don't want to run too much overtime, but we have lots of opportunity for everybody to discuss this back and forth. If you do have questions and you want to reach out, certainly if you want to engage, I want to let everybody know again that we're in the requirements definition and management business, so we're happy to help people out. Give me an email. If you want the slides, send me a note or send a note to Adrian at ModernAnalyst.com, and I wish you all great success. Cheers.
Thank you, Keith, for another great webinar. And, of course, thank you for all of you who attended to today's Modern Analyst webinar. I wanted to point out, again, as Keith was saying, that the webinar, along with the slides, will be archived at ModernAnalyst.com within a few days, or you can reach out to Keith, and he will also get you the slides and a link back to the recording. Thank you again. This concludes today's event. We hope you have a fantastic day.